we kind of watch these pretty closely. Everybody's like, oh, this will tell us what the Fed's going to do. What are you expecting from the jobs report? How do you think the Fed reads this?
I don't think the Fed's job is going to be that easy. The labor market is cooling, it's slowing, but it's a very gradual and orderly descent. And it's not going to be linear. I actually expect that we could see a two-handle on this report. ZipRecruiter job postings have been stable all year. It actually ticked up in May. The ISM services number came in really, really hot. So let's see.
Whoa, whoa, whoa. Back up, Joy. You can't just come out here dropping bombs. You think it could be over 200,000?
I definitely.
So that sounds like you think there's no July cut. I mean, the cuts are going to be pushed way back then.
So, I think a strong labor market is not necessarily incompatible with rate cuts because wage growth is cooling and the dynamics, the underlying dynamics, like in that JOLTS report that we saw earlier this week, those are all cooling. This is a funny economy where employers are slow to hire, slow to fire, workers are slower to switch jobs, and that all puts downward pressure on wages because we know that wage growth for job stayers is a lot slower than for job switchers. So
are we all misreading the JOLTS report a little bit? I mean, everybody's saying like that's a sign of a cooling job market and, it's the most openings in 3 years. I mean, like, it's just everybody's all over this one, but you're saying the JOLTS might not be an accurate read of what's really going on in the job market.
So I think that job openings have been overstating the strength of the labor market for a long time, right? Online job postings are all the way back to where they were before the pandemic. Quits are lower than that. And this openings number is still 15% higher. But it's not like there was a big drop suddenly in April, right? That last number that we got on Tuesday showed a 296,000 decline in job openings. 204,000 of that was in healthcare. Do you see any weakness in healthcare? We certainly don't at ZipRecruiter.
I don't. I mean, but I'm not actually at the doctor's office that often. I'm just going to be real with you. I want to talk to you about the key data points in this. So you're saying wage growth decelerating is a key data point. Is there anything else that we should really be looking at? Are there any areas in this report that you're really focused on as either a read on the economy or a read on what the Fed may or may not do?
There are lots of numbers I'm going to be looking at. I'm going to be looking at what this summer job market is turning into for young Americans.
Explain this one to me, because I looked at your notes. I didn't quite understand why that's so important.
Well, it's often a bellwether for the rest of the economy. And we've been seeing lots of doom and gloom headlines about how entry-level hiring is plummeting, how there are 75% fewer entry-level jobs for new grads. That doesn't really appear to be the case. Actually, youth employment is has either been the highest or the second highest each month this year since the Great Recession. So I think we could see that number actually hit a high since the Great Recession in May.
All right, so there's a barometer of kids working at ice cream parlors and McDonald's that gives you a read on the economy.
And new grads, so 18 to 24-year-olds as well, not just the youngest teens, the 16 to 19-year-olds.
All right, interesting.